Ritu Mehta and I lead Investor Relations for Tanla platform. On behalf of everyone at Tanla, I would like you to welcome to our Q2 earnings call. Joining with us today are Uday Reddy, our founder, chairman and CEO, Deepak Goyal, Executive Director and Chief Business Officer, and Arvind Vishwanathan, our CFO. Uday Reddy, our founder, chairman and CEO, will share perspectives on business imperatives and strategic progress made by Tanla. After his opening remarks, we will be happy to engage with the participants and address the questions. Before I hand it over to Uday, let me draw your attention to the fact that today's discussion may feature statements that are forward-looking in nature. All statements other than statements of historical facts could be deemed forward-looking in nature. Such statements are inherently subject to risks and uncertainties, some of which cannot be predicted or quantified. We have given a detailed disclosure in this regard in our presentation, which is uploaded on the website. Now, over to Uday.
Thank you, Ritu. Good evening and a very warm welcome to all of you to our Q2 earnings call. We have had a stellar performance in Q2 across all dimensions. Revenue grew by 44% and EBITDA grew by 83% year on year. Our EBITDA margin improved by 452 basis points year on year. Our EPS grew 72% year on year, and we delivered a double-digit EPS in the quarter for the first time. I talked about Rule of 40 in the last call. Rule of 40 is aspirational for SaaS companies. We have been operating at an incredible Rule of 60 for the 2 quarters in a row. What gives me a great pride is that we have been driving profitable growth while maintaining strong financial discipline, generating best-in-class free cash flows of 222 crore and maintaining a very strong balance sheet. Gartner recognized Tanla in the latest CPaaS market guide as a key global solution provider in the developer market. We are the only Asian company to be recognized under developer category. Let me give my perspective on what is driving our growth and performance. We are seeing a very strong demand environment in India. Growth is driven by increase in volumes for the existing customers as well as the new use cases. Entry of new customers are also adding to the market growth. Growth is led by BFSI, and we are also seeing a global good traction in the areas like retail, e-commerce, and government. We are gaining wallet share in our existing customers while gaining market share from newer clients. I talked about 3 things in the last call: platforms, partnerships, and global expansion. We have made good progress on all. Let me start with platforms. We celebrated the first anniversary of commercial launch of TrueBlock, world's first and the largest blockchain use case, and we increased our market share to 63%. We are betting big on Wisely and making a significant investment. We have added new features on Wisely platform, and we will continue making investments to drive innovation and create new revenue streams to expand our total addressable market. Our partnerships, we have closed 2 significant partnerships on Wisely platform to further drive our one platform strategy. We are in beta testing phase, and we would like to announce this in the current quarter with a greater detail. Our approach is to showcase Wisely in India and demonstrate value before taking it global. We are working with one of the largest consulting firms in the world on Wisely GTM strategy to serve global markets, and this would be ready by end of December. We will be disciplined in our capital allocation. We will be focused on the bolt-on acquisitions that would provide niche capabilities. Our investments will be focused on Wisely platform and global expansion. We are building the company for long term. We are integrating ESG into our business and working towards sustainable growth. We presented our first detailed shareholders report to help understand our business better. We are very excited about the opportunities in front of us, and we are thinking big. With this, I am opening the floor for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1 now. We have a first question from the line of Saurabh Dugar from Antique Stock Broking. Please go ahead.
Good evening, sir. Thank you so much for the opportunity. So my first question is, how has been the competitive intensity, this quarter with the launch of Cinch and Twilio? They have entered the market recently. So how has the performance been? Hello, am I audible?
Deepak here. Yeah, Deepak here. Just to tell you, Cinch and Twilio, it's been a long time that they've entered into the market. It's not recently, I would say. And at the same time, they have entered by acquiring 2 existing competitors of ours who've been there in the market for the last 2 decades. So I would say nothing has changed.
Right. No, my question was more towards, after the acquisition, how have you, seen the performance? Has there been a change or any sort of update?
Well, you have seen our results. We have been growing very well, right?
Right.
That is one. And just to tell you, see, we are able to increase our wallet share with our existing customers. We are acquiring new customers. It is a very good growth coming in. So yeah, that's how it is.
Okay. My second question is, how are you targeting, the new age companies or the relatively younger companies, someone like a Nykaa or a Dream11, how are you sort of acquiring them, and how have they grown? I have seen that you've grown in the edtech segment quite significantly. I was reading the presentation. Just wanted to understand, how you approach them and what is the sort of the idea and the process.
We have a very robust sales engine in place, and our business team is the best in the industry, I would say. Okay, and both the names what you have just quoted, they are our customers, and we have we have been going after the new age companies in a big way. We have a very good funnel in place. We have been acquiring a lot of new age companies, not just edtech companies, but otherwise other companies as well, and we will continue to do so.
Right. Good to know that. And last question from my side, Q3 I believe is one of the strongest quarters for you people. So, how are you expecting Q3 to go through this time? And have you seen any such trend in the past, the opening 3 weeks of the quarter, if you could highlight? Thank you.
So, it's too early to comment, and but yes, as you have seen, we have been growing more than the market, and we would continue. We are very confident we would do so in Q3 as well.
Okay. Thanks, sir. Thanks.
Thank you. We have next question from the line of Dipesh Mehta from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity. Couple of questions. First, about the new breakup which you have provided, platform and enterprise. Can you help us understand how we have divided businesses? What is included in platform business? What is part of enterprise? And how the cost is allocated across the business? Second question is about the partnership. You indicated 2 new significant partnerships we added during the quarter. So if you can provide some broad partnership-related things, let's say in last 2 to 4 quarters, how we expanded partnership on Wisely platform, and how we expect this partnership to help us first grow domestically and then internationally. Third question is about our strategy for non-SMS related revenue. So if you can provide new product which are, let's say, non-SMS, WhatsApp or any other product which WhatsApp, email, RCS. If you can, or voice, if you can provide some perspective how that revenue pie is shaping up for us in enterprise business. And the last question is about the ILD price uptick which happened last quarter. So how much of this revenue growth was contributed from that benefit? Thanks.
Sure. Thanks, Dipesh. This is Arvind. Maybe I will take the first one, and I'll ask Uday to give light on the partnership, and Deepak would kind of address the third and fourth question. We've been disclosing platform and enterprise revenue split for some time now, because we started it in part of our Q4 results, right? Platform revenues are revenues that are generated as a revenue share from a platform where, there is no usage cost. Right? There is no transactional cost associated with it. It is basically a revenue that we get because the platforms are being deployed. A best example would be our SMSCs or Trubloq. Right? So that is the basis. The cost for platform business is just the cloud hosting charges. Right? So that is the split, and that's the definition that we have given. I would now request Uday to give you a flavor on the partnerships, because that's a big area for us.
Thanks, Arvind. Like in terms of the partnerships, as mentioned in my speech, there are definitely significant partnerships for us, mainly for Wisely platform, and both the partnerships are exclusive on Wisely. As we speak, both are under beta testing, and when I say beta testing, we are trying with couple of our large customers, and once we stabilize this beta testing with 2 of our large customers, we will definitely release to market with a successful use case, and probably at that time we will definitely talk about opportunity size around these 2 opportunities, 2 partnerships. All I can say is I'm not in a position to quantify the size, but all I can say is that they are pretty significant. There is no doubt about that. But so I would like to leave it at this point of time. I would like to leave it here, and please allow us to come back in the next 2 months before we announce to market on the partners' names, as well as with the value associated with this partner. I will request Deepak to talk about ILD and mainly on the WhatsApp area.
Hi, Deepak here. So you asked for how are we doing on other channels other than SMS. So firstly, just to tell you, we have an omni-channel platform where we are channel agnostic, and we provide all the available channels in today to our customers as an option to communicate, be it voice or it is email or it's WhatsApp, so the RCS, SMS, and now email is growing very well. Okay, we have seen a good growth in email. Voice is, I would say, it's not, growing very big because the kind of business we are in, voice has a limited, role to play. But if you look at WhatsApp, because we are focusing a lot on conversational messaging, and we're building a lot of use cases around conversational. So we have seen a huge growth coming in WhatsApp. In fact, in Q2, we have seen our revenues going double compared to Q1 as far as WhatsApp is concerned. So we believe that that momentum will continue, and we will add more channels as well other than WhatsApp for conversational. So we are not going to just stop at WhatsApp or RCS. So that we would hear soon from us. And your last question was around ILD price increase. Yes, so there was an increase in ILD price, and we had a positive impact on our revenues in Q2. And if you compare to Q1 versus Q2, I would attribute about 50% growth coming from due to ILD price increase.
So just to kind of elaborate on that, Dipesh, we grew sequentially about 34%. Roughly 50% of that can be attributed to the ILD business, and the balance would be the rest of the business momentum.
Understand. I will follow up on, I think, some of the answers. First about, let's say, partnership. We say to whether it is client-specific partnership where we have engaged two large clients, maybe in different industries, or I don't know whether maybe in the same industries, who can become reference client for future growth, or it is with some SI partner or some consulting partner who can help us expand into multiple client and multiple industries subsequently. Second follow-up on the same about non-SMS revenue. Can you quantify, let's say, what percentage of our enterprise business coming from non-SMS at this point of time, and if you have any target in mind, where do you expect it to reach in maybe 2 years, 3 years, 5 years out kind of thing? And I think in the first question you about giving platform and enterprise, just want to understand theoretically, let's say if we have Carix clients, now we charge them for, let's say, SMS, we also charge them for TrueBlock. So then how revenue will be divided? Because I presume, let's say in TrueBlock we charge roughly around 2.5 paisa, additional to what, let's say, Carix might be charging, let's say 9 to 10 paisa. So if you can help us understand these nuances. Thanks.
Uday here. In terms of partnerships, we're not talking about SI partners. All I can say at this point of time is these partnerships will definitely increase. It will help us increase our revenues. So I would like to leave it there. Please allow us to come back with the next 2 months with successful use cases with both the partners. And definitely, let me repeat again, they are very, very significant partners of our Wisely platform. Arvind, do you want to talk about?
Okay, so let me cover quickly, Dipesh, on the platform definition, right? The platform revenue, so we do not charge Carix for TrueBlock, right? The business model is a little different. Maybe we can take it a little offline, but effectively the enterprise pays an integrated price to Carix. The telco gets the payment, which includes the cost of DLT. We get a revenue share from the telco. So in this example, we do not really take revenue on a TrueBlock from Carix for the purpose of platform. It comes from the telco. Trust that clarifies. On the on the new age OTT channels, we are not calling out a percentage right now, Dipesh. But all I can say is we are scaling that up significantly, and once it reaches a certain size, we will definitely call it out. But at this point of time, we're not calling out a size as far as that is concerned.
Thank you.
Thanks.
Thank you, sir. We have next question from the line of Abhimanyu Kasliwal from Choice International. Please go ahead.
Good afternoon, sir. Good afternoon, Uday. Good afternoon, Arvind. Am I audible?
Yes. Yeah, good afternoon.
Oh, perfect. Anyway, Mr. Arvind, you might remember me. We had a detailed conversation in the past. I had a few questions, Mr. Uday, Mr. Arvind, and the rest of the management. I will ask them one by one. My first question, sir, is the old story about the cash on books. We do have 800 crores of cash. The business is a high margin business. I do realize that we've kept the cash to keep it ready for acquisition. Because Mr. Arvind had said, one good acquisition can take up at least half of it in one shot. Do we have any acquisitions lined up If not, then can we consider some kind of payout of dividend, or do we plan to keep it on the books? That is my first question. If you could guide me on that, sir.
Yeah. So Uday here, let me answer that about the cash. Yes, we hold around 840 crores cash on the books as we speak. Definitely, we would like to use this cash for our global expansion plan. Number two is definitely we're going to invest a lot of this money on our Wisely platform. That's number two. Number three, definitely in terms of acquisitions, like we're not going to buy any company for numbers. We are very, very clear about that. We may acquire a company for you can call it a tuck-in acquisition or bolt-on acquisitions, which will enhance our capabilities on Wisely platform. But definitely we are not here to buy any company for numbers. That is very, very clear about it.
Okay. Got it, sir. So follow-up question, if I may. So the enterprise business is doing very well, but the platform business is the real money spinner, the real cash cow, over 80-90% margins. Would there be any way that we can project the growth for this segment? And also related to that, whilst we have tied up with most of the telecom providers, I know we have not tied up with Jio. And there's another telecom provider where we are one of the two providers of support. So my worry is that what is there to stop the other telecom providers from doing the same? Where do we have our moats? And if so, can we be able to move into new geographies? When I asked Arvind sir this question a month ago, he had said that Tanla's strategy is to push entrench itself in its existing markets. But if you could throw more light on that, Uday sir, then I would be very grateful.
Okay. In terms of yes, we do work with all the mobile carriers in India, including Jio. Okay. So we work with each and every telco in India. That's the first point, right? So second point is yes, some of the telcos have been in the CPaaS business for quite some time, and sometimes we partnership with them. Sometimes we compete with them. So in terms of global expansion, yes, Wisely, as I told you earlier, through Wisely we're going to expand the international market, and once we see the traction in India with successful use case, we will launch Wisely platform in the global markets very soon.
Okay, sir. Last question. So in that case, could we have any kind of indication in terms of what kind of, for example, now I know we have two partnerships coming up, and we cannot talk about specifics, but if we have some indication that for the next quarter or two, what kind of revenue growth or margin growth we can expect, because we've seen fantastic revenue growth and margin growth this quarter. Can we expect this trend to continue? Can we expect it to flatten a bit? What would you say, sir?
Couple of things that we are not here to give you make any forward-looking statements. Having said that, we are definitely going much faster than industry. That's what Deepak has also covered in one of the questions, like. So if the market is growing, we are also growing, right? So then we are not in a position to qualify or quantify these partnerships. Please bear with us for a couple of more months before we announce the market.
Okay, thank you so much, sir.
Thank you.
Thanks, everyone.
Thank you. We have next question from the line of Anil Sarin from Centrum Wealth. Please go ahead.
Good evening, top management of Tanla. First of all, accept my congratulations for the awesome performance. Clearly, I mean, you had mentioned earlier that the industry is growing at 20%, and against that industry growth, you seem to be growing much faster. So, well done and more power to you. So, my question was more of just a technical question. In your leading slide, in your first slide in your presentation, you cover various revenue market share, volume market share. So I just wanted to know, DLT volume share is 63%. NLD volume share is 41%. So are these two things different? What I wanted to know was that is it that there are some non-DLT messages also going out right now, or they have been completely stopped? So what is the distinction between NLD market share and DLT market share?
Yes. So Anil, Uday here. When it comes to DLT platform is deployed with mobile carriers. Our DLT platform is deployed with 5 out of these 7 mobile carriers in India. And if anybody wants to use these specific mobile carriers in India, they are supposed to use DLT platform to start with. That's number one. So number two is when it comes to our NLD business, we are predominantly talking about the Carix volumes here. So 100% of the Carix volume goes to our TrueBlock, which is a DLT platform. In addition to that, our DLT platform is also used by Carix competitors, if I'm allowed to say that. That's how our market share in DLT is around 63%, as opposed to around 40% odd in NLD business, NLD traffic.
Okay. And there was one more aspect as a follow-on. What I have come to know is that there is some firewall business and there is some regular business. If you can just explain what is this firewall business that you do and what is the regular SMSC, what is the difference, and where are you doing firewall business, where are you doing SMSC business amongst the telcos of India?
Yeah. So when it comes to firewall, we have firewalled one of the probably the largest telco in India. I'm afraid I cannot name it, but you know what they are. They're the largest telcos in India. So we have firewalled the third largest telco in India. So first and third largest telcos were firewalled by us. That's number one. Our SMSCs are with at least 4 mobile carriers in India. So firewall we have done with 2 networks. In terms when SMSCs we are working with 4 telcos. Anil.
Okay. One last question from my side. If you were to think about revenue composition and revenue growth, is firewall a bigger business in terms of quantum vis-a-vis SMS? That is part one. And second is, between the two, which one is growing faster? Between the two, which is bigger? Between the two, which is growing faster?
Yeah. So Anil, the firewall is predominantly for ILD business. Okay. And SMSC, or you call it as a hub, SMS hub, or they both for NLD and ILD. Okay. So if you ask me which is growing faster in terms of volumes, our NLD in terms of volumes, NLD volumes are growing much faster than ILD volumes. But having said that, there is an increase of price in ILD in the last quarter. So, but in terms of volumes, it is NLD. In terms of value, as we speak, ILD in the last quarter.
Okay. And this is there a chance of you doing firewall with other telcos of India as well?
I think my information is all the telcos are firewalled. So I would like to leave it here. Probably we'll talk about in the near future about this business in the next 2 months. Next 2 months.
Okay. Thank you so much.
Thank you.
Thank you. A reminder to participants, if you wish to ask a question, please press star followed by 1 on your touchtone phone now. We have next question from the line of Sudhir Bhera from Right Time Consultancy Services. Please go ahead.
Yeah, good afternoon, sir, and many congratulations for outstanding results, sir. Sir, hello, am I audible?
Yes.
Yeah, sir, before asking the question, I just would like to mention a point and hope that authorities are listening. We have been under ASM since 1 year, and I think a lot of small investors are suffering because of that. Just I wanted to put this thing on the record. Sir, my question would be like, what is the volume growth in Q2, sir, if we exclude the price increase? Overall blended volume growth, if you can elaborate on that.
Arvind? No, so we are not calling out volume separately, Sudhir, right? We've not disclosed volume. All I can tell you is that both sequentially and YOY, our volume growths have been very, very strong. Uday mentioned in one of the previous questions in terms of NLD business growing much faster, right? So we've not called out volume specifically, but we've had very good volume growth.
Sure. And sir, my second question is, what kind of opportunities are there in the global market? Once we will be in the global market from FY23. So what is the opportunity size, if you can give some color to it?
Mr. Subir, Uday here. I think Wisely is there to address the complete CPaaS market. So we are investing a lot of money on the Wisely platform, and it is going to disrupt the entire CPaaS market. So the market in front of us is huge in terms of global market, but we're just waiting for a couple of successful use cases in India. Once we see them, see the success in India, we will definitely launch in Wisely in a big way. And all I can say is there is a massive opportunity in front of us. That much I can tell you.
Okay, sir. Understood. Thank you, sir. Thanks for the opportunity. And again, congratulations to Team Tanla for outstanding performance. Thank you.
Thank you.
Thank you, sir. We have next question from the line of Milind Karmakar from Dalal & Broacha. Please go ahead.
Well, congratulations, gentlemen, on a great set of numbers. And so I had two questions. One was, of course, on the ILD price increase. Just wanted to understand that is it sustainable over a longer period of time, or it keeps on fluctuating? That was my first question. And my second question was on cost of services. Over a period of time, we have seen cost of services slowly coming down. Last 2 quarters, it has remained stable. So as we go, as we go ahead and go to the international market, just wanted to understand the cost of services, whether it is likely as a percentage of overall sales, whether it's likely to come down or remain at the current level. Thank you.
Hi, it's Deepak here. So to answer to your question on ILD, so I'd like to tell you that ILD prices have been last price increase. More in line with the international rates in the other countries. Okay. So Telcos decided to increase the price, and to make it in line with other countries, outside India. And I would say it is, highly sustainable. The prices would be, sustained. I don't see any issue there.
Okay.
And what are your next question? Cost of services.
It was on cost of services
in different geographies.
So my question was that as we move internationally, the cost of services, which is one of the largest expenditure overall, whether it would, in terms of as a percentage of the top line, would it remain same, or is it possible that it could come down as well?
So Milind, we usually track our gross margin. Okay.
Right. Right.
Our competitors in the global market,
right.
Their margins are on par with our margins. So we are not really worried about the cost of services, and we closely track our margins rather than cost of services.
All right. Thank you so much, and all the best. Thank you.
Okay, thanks.
Thank you.
Thank you. We have next question from the line of Kushan Virani from InCred. Please go ahead.
Hi, congratulations everyone for the amazing results. My question was on the services that you all are running alongside the government. So obviously, after the successful execution of TrueBlock on the CoWIN platform, are there any other such initiatives that you all are looking at with the government?
Hi, Deepak here. So, you see, our one of the replica of our platforms is deployed at National Informatics Center in Delhi. And all the central ministries, a lot of state governments also are connected with our platform. So CoWIN is one use case, where you've seen that all the OTPs which are coming from CoWIN app to register for vaccination, or you get messages for confirmation of your vaccination from National Health Portal, or you getting the messages on your certificate. So they're all coming in through our platform. So that was a couple of use cases which are new use cases, which we participated with the government and we agreed on this flow. Similarly, there are we keep talking to the government and keep coming up more and more such cases. Let's say, for example, in the past, I can tell you Man Ki Baat was one such thing, right, where we actually brought Man Ki Baat on voice, and then we brought in on multiple languages. Today, as you see, whether any messages coming in about your GSTIN or your income tax related messages, or your anything to do with health or agriculture, so there's a lot of use cases which we have worked upon along with government, and this continues. So yes, you would hear, we will be bringing more and more cases to increase our number of transactions and messages on our platform.
Sure. Thanks.
Thanks, Deepak.
Thank you. We have next question from the line of Amit Chandra from HDFC Securities. Please go ahead.
Hi, sir, and thanks for the opportunity. So my first question is on the customer concentration. So our top 20 customers roughly contribute 65% to revenue, and the revenue from top 7 is around 43-44%. So how do we see it? Is it a risk because the concentration is on the higher side, and are we expecting the concentration to be the same, or with growth we can see some moderation in this? So this is the first question. And second question is on the contracts that we have with enterprises. So the contract that we have, is it a yearly contract or it's a long-term contract? And how do we decide on the pricing? And is there a pricing change because we have quite healthy relationship with the customers, and we from one enterprise we get a bulk of revenues. So is there any case of pricing discount or that is being asked from the enterprise side whenever the contracts get renewed?
So let me answer the first question, Amit, on the customer concentration, right? If you looked at our customer concentration as kind of been coming down, it used to be like 70%, 1 year back, and it's kind of come to 66% now, right? Although if you really look at it, it's not that the customer bucket degrew, the top 20 customers grew 35% YOY. So it's a little bit of a great thing that we are able to grow our customers. We are also adding to the base where the overall company is growing faster. So we do see a lot of traction in terms of how we work with existing customers, how we expand our wallet share in those, right? Both in terms of A2P as well as offering all the other channels. So we are a holistic partner to our clients. You've seen this reflect in all customer metrics. Our customers giving us greater than 50 crore annualized revenue has gone up from 10 to 19 over the last 12 months. So, I think it's a good situation for us where we have tremendous depth of relationship with our customers. We have tremendous customer retention. We are able to scale existing customers while at the same time continuously broadening our base, because we also added about 160 new customers in the H1 of this year. Right? So we're doing a bit of both, and that's been good. And many of these customers are long-standing, Amit. So it is, these are decade-long relationships, 2-decade-long relationships.
So just to add what Arvind said, if we have any risk with these customers, so just tell you, we have not lost a single customer in last more than, I would say, 15 years. So I mean, you look at it. I mean, ICICI Bank is there with us for 18 years. HDFC Bank is there with us for more than 16 years now. State Bank of India is there with us for 16 years. Kotak Bank is there with us for more than 12 years now. Axis Bank is there with us for more than 13 or 14 years now. Government of India, the first time they came up with something like this, that was about 9 years back, and 9 years, we are there with them. So these are very, old relationships, very strong relationships, and deep integrations are there. So that is one. Number two, about when you talk about the contract duration. Yes, the usual duration is about 3 years, and most of these contracts are on auto renewable basis. We do have price discussions, definitely, and but let me tell you the kind of relationships what we have with our customers, the kind of comfort they find with us. We are able to sustain the prices more or less, and our margins. That is more important, right? So you see our margins are quite steady, and and we are able to increase our wallet share as well.
So, in terms of the, as you said, we have deep relationship and long-standing relationship with the with the top customers. So I assume there has been no churn or very less churn there in the top 10, top 20, right?
As I said, there is no churn.
No churn. Okay.
Yeah.
And in terms of the pricing, is there a discussion relating to like discounts whenever the contracts come for renewal, or is it based on the kind of services that we're offering, and is it because how I see it is it has become more of a commoditized kind of a service, or like maybe I'm wrong, or we are providing such services which cannot be replicated by others. So is that the reason for the premium or the pricing to sustain, or is it because of the relationship?
See, so let me tell you, okay, this is not a commoditized service, first of all, and if you really see the same SMS, you would find different prices for different industries, and also if it is commoditized, then the price should be more or less the same for everybody. But the kind of market we operate in, this is a very, very critical services what we are providing. Yes, we are billing the customers on per transaction basis, but it doesn't mean that it becomes commoditized. Because there's a lot of on the back end, a lot of solutions are gone into that. A lot of let's say for example, I've shared in the previous calls also the kind of use cases we have built for let's say BFSI sector. And we are the thought leaders in this market. We spend a lot of time with our customers, understand their pain points, how we can actually create a wow factor for their customers. So basically, here it is not about for let's say HDFC Bank to just send a communication to their customers. It is about if they are sending OTP, then how it reaches let's say maybe less than 2 seconds, less than 3 seconds. How we can actually increase the conversion of a OTP. How that's what the customer is looking at. I mean, and this is where we excel all the time. I mean, we help our customers to acquire new customers. So we provide a lot of we get involved. We provide a lot of analytics. We provide what kind of campaign should be run, okay, to acquire more customers. So it is more about ROI, what customer is looking at on a campaign. So maybe my price could be higher than whatever maybe our other vendor on the street, okay? But still, customer would like to remain with us because we are able to provide better ROI. So that's what matters.
Okay. And sir, in terms of our relationship with the government, so is government is there in the top 10 customers? And in terms of pricing, like, do we have the same pricing for the government that we have for enterprises? And is there any different collection in terms of collection terms with the government? Is it on the higher side versus the enterprise?
Okay, definitely government is is part of our top 20 customers, right? As far as pricing are concerned, so there is a separate price line for the government. Okay, so these are called non-commercial messages, and for the non-commercial messages, the price is much lower than the for let's say, for example, for a bank or an e-commerce company. So there is a different kind of price line, which is as mandated by TRAI, our regulator. In terms of payment terms and collections, yes, the collection period is little higher and compared to our other customers. But as you see, overall, our collections are pretty good. Our collection days are quite great. Less than 50 days, in fact.
Okay. And sir, on the platform business, so we are based on your numbers that you have disclosed this quarter, we are at 90-95% kind of gross margin levels. So do you see that these kind of margin levels to sustain, because these are very high numbers? So can it come down to 80-85%, or is there any investment that you're planning there, or what is driving this kind of high like gross margins there? So because that is we have not seen any business or platform business globally also operating at this such high gross margin. So is there a risk of that coming down?
It's a good question. Uday here. The platforms are normally are entered the agreements are entered for long term. That's number one, right? Number two is platforms are revenues are generated on the revenue share basis, wherein there is no cost of services involved here. So in other words, like the telcos generate the revenues for themselves, and whenever they generate the revenues, they part of it, the revenue share with us. So from our revenue share, we don't need to book anything towards the cost of services. That's the number one, right? Number two, from the net revenues, we end up deducting only the cloud charges, which are around 5 to 7%, depending on the platform, right? So it all depends how you want to book your gross margin, right? But as you speak, we are deducting only the cloud charges. But if you end up taking out the direct costs, which is like your sales and marketing cost or the L1 and L2 teams cost, we may probably end up around 70-75% or probably around 70%, which is in line with the SaaS players globally. So SaaS players, they normally have around 70% gross margin globally. That's the clear phenomena, and I don't see any challenge with our margins when it comes to platform business. And they're all long-term contracts with mobile carriers.
Okay. Okay, sir. Thanks, and all the best for the future.
Thank you.
Thanks, Amit.
Thank you, sir. To ask a question, participants may press star 1. We have next question from the line of Tejas Shah from Unique Stockbroking. Please go ahead.
Yeah, I missed the earlier part of 10-15 minutes. Just wanted to know what is happening on the Dubai side, where we are supposed to tie up with the two telcos. Any update on that?
Can you please repeat?
On the Dubai side, we were going to tie up with two telcos and start rolling our services. Any update on that?
That's a good question. So we have the DLT platform, which is a blockchain platform, is under the deployment with both the mobile carriers in Middle East for more than a year. Since it is a blockchain platform, it's a long-run process. Same thing happened in India also. It took almost 1.5 years before we went live. And so we have delivered the deployment from our side, and both the telcos are in talks with their regulators, TRAI, to get the sign-off before they launch their services. In fact, some of the services on our platforms already gone live, but for them to sign up all the use cases, I think it is taking much longer than what they expected. So we hope to close the final sign-off in the next, probably in the next quarter or so.
So I think by next quarter it should be live.
Yes.
Okay. And any growth plans apart from this?
Sorry, come again.
Any growth plans on the international side apart from the Dubai? Because it seems it takes a lot of time to deploy, and once it is deployed, normally it is not easily replaceable.
Sorry, once it is deployed, sorry, can you please come again?
Once your services are deployed, normally it is very difficult for any other competition to come and take over that business.
Absolutely. Like, so this blockchain platform is under development, under deployment for more than one year. And yes, it is not probably, I don't want to use the word impossible, but more or less, like, it's nearly impossible to replace these platforms. That's number one. But mind you, like, these platforms which are being on deployment with mobile carriers in Middle East, they are not on revenue share basis. They are on the license basis. But 100% of the traffic in Middle East go through this platform. And when it comes to expansion plan, we are waiting for. One of the largest consulting firm in the world is advising on Wisely GTM, and once it is ready, and meanwhile we are expecting a couple of successful use cases from India on Wisely platform, and once we have the GTM and the successful use cases in India, we would like to take Wisely to the global market.
One last question. How do we differentiate with Route Mobile in terms of the businesses?
I don't want to really comment on our competitors, so I would like to leave it there.
Okay, not a problem. Thanks a lot. Yeah.
Thank you, sir. We have next question from the line of Deepak Chokhani from Raid Capital. Please go ahead.
Good afternoon, Uday and Tanla team. Excellent numbers, really excellent. Quick question, more on the EBITDA margins. Gradually, the intention is to move to Wisely platform, and my question is, would we see a better margin once we move to Wisely, or once our clients move to Wisely?
Deepak, like, as mentioned in my earlier speech, like, our margins tend to be very, very high on platforms, and Wisely being the platform, and our margin profile is supposed to be better off going forward. Yes, to answer your question, yes, whenever we see the revenues increasing on our platform, our margins will be better off, yes.
Perfect. Okay, sir. Thank you.
Thank you, Deepak. Yeah. Thank you.
Thank you. We have next question from the line of Sharad Kohli, an investor. Please go ahead.
Hi, Uday and team. Firstly, I'd like to start off by saying that the disclosures that were made this quarter were phenomenal, and the kind of free cash flow generation that was shown this quarter is symbolic of a market leader that is growing significantly above the industry and taking share from other market players. So congrats on that. The two questions that I have are both on financials. The first one is on the gross margin. So if I look at your gross margin profile over the last 6 quarters, it's gone from 23.1% in the first quarter of 21, and it peaked last quarter at 27.7%. This quarter, it's slightly down at 27.4%. My question specifically is, given that we did have, basically that ILD rate doubled, right? And ILD is maybe, I think it's about 30% of your business in terms of revenue contribution. So there has to be some place where price broke, right? Because if you have 30% of your business that doubled in pricing and yet your gross margins went down, albeit not by a lot, by 30 basis points, there has to have been price compression somewhere, right? So that's my first question, if you can just shed light on that. maybe just a quarterly thing, a one-time thing, but if you can just shed some light on that. And my second question had to do with just understanding what other financial liabilities on the balance sheet is, because that took up, almost 126 crores of cash flow. So I just want to understand what is in that line item on the balance sheet. Thank you.
Sure. So let me answer the first question, Sharad. See, I think what people don't realize is that, it's not a price increase in ILD to start off with, it's a cost increase on ILD, right? The telcos have increased the price. The reality is we've been able to go and get price increase from our clients, right? On the back of cost increase. In fact, it gives tremendous tribute to our business model that we have that elasticity in terms of our relationship with customers that, even if telco costs go up, our ability to kind of, maintain our profitability and maintain the pricing is a very, very big thing, right? So it's not that price has doubled from customer while cost remaining same. If anything, we've been able to maintain our margin percentage by, going back to our customers, renegotiating the rate and defending it. So to think through a price increase as a big increase may not be a right way of looking at it, saying that it should reflect in profitability.
Okay.
So could you repeat your second question?
Yeah, there's a line item on the balance sheet. So if I look at a cash flow statement, right, 126 odd crores was because of an increase in financial and non-financial assets. And if I just go to the corresponding entry on the balance sheet, it's basically under the category other financial assets, which was 335 crores as opposed to 256 crores, the corresponding March 31st number. So what is in that line item, other financial assets? Because that's grown significantly.
So it will be unbilled revenues. So what happens, Sharad, is that like in the entire telco industry, the billing for the quarter happens at in the subsequent month after the reconciliation. Now, when we have growth, like we have had growth, obviously our closing revenues are higher, and therefore the unbilled is a high number, which tends to increase.
Okay, so let me just repeat that. So you've already
You're talking about liabilities or assets? Let me just clarify that. Are you talking about liabilities or assets?
I'm talking about assets, financial assets. So basically you're saying the service was provided, let's say, in the last 10 to 15 days, let's say quarter ends March 31st, you provided a service, let's say, between March 15th to March 30th. That service has been provided, but you haven't sent the billing for whatever reason because telcos don't want to show on their side that it's an unpaid bill.
It's not about telcos. So we bill at the end of the month. So if I deliver work for a customer from 1st March to 31st March, the invoicing will get raised sometime in April. And therefore, from a financial perspective, the revenue is recognized through an unbilled. Typically by this time, right, we would have billed more than 90-95% of whatever remains as unbilled in the books. So it's more a substitution of debtors just from an accounting perspective.
Got it. So this is purely, bulk of this is saying that, and so it's fair to understand, just like receivables, as the business accelerates, there could be, I should expect this other financial number because of the way the billing cycle works, that this number should technically continue growing and hence should be, depending on when we see it, when the results are reported, there should be a drag on cash flows from this, but this is purely an unbilled item as opposed to anything else.
Yes. But typically you will also find that, there will be an increase in non-financial liabilities, which is the telco cost, which is also not big. So theoretically, it should affect the cash flows only to the extent of the margin.
Right. Fair enough. That's a good enough explanation for me. One question actually I do have for Deepak, right? And maybe this is just me being stupid and not knowing the industry well enough. But if you look at the customer distribution, right? So we had kind of 9 customers move from the 10 to 50 crore bracket to above the 50 crore bracket, right? That's how you had the extension. And so that means that 9 customers moved from the 10 crore bracket to the 10 to 50 crore bracket. And that number has stayed flat. And to me, what was striking was that the growth in that bracket of customers was only 5%. Now, I don't know if 5% versus 14% wallet share growth in the high-end segment is a good or bad thing. I don't know if you guys have any perspective on that. I would think that 5%, maybe I shouldn't think anything, but is 5% a good number for that 10 to 50%, 10 to 50 crore bracket versus when it's showing 14% growth in the higher numbers?
Yeah. So, Sharad, I will explain. So, one, you look at on the consolidated basis. So we've grown 46%, and here we are talking about customers who are giving us revenues more than 1 crore. So we are only considering them, right? So it is 46%. Now, if you look at above 50 crores bracket, the growth is 73% because from 10 the customers become 19. So we moved a lot of customers from 10 to 50 crore bucket to above 50 crore bucket. Correct? And when we talk about, and if you look at the number of customers in another slide, it remains flat. In the 10 to 50 crore. That means, what does it mean is that from this bucket we moved 9 customers to above 50, and we also moved 9 from less than 10 crores to this bucket.
Correct.
Right? So it is actually, if you really see, it's a good news, overall. There are a certain amount of customers moved from 10 to 50 to above 50, and a similar number of customers have moved from 1 crore, a 10 crore bucket to 10 to 50 crore bucket. So this is how it is. But if you look at on the consolidated basis, we have an overall 46% growth. And one more thing.
That I understood. I was just saying that there's a slide where you also said that the revenue growth of each of those brackets, the revenue growth for the customers that belong in that 10 to 50 crore bracket was 5%, right? But the revenue growth for the customer...
Let me answer that. See what happens in each of these buckets, and that's important to kind of understand why it's important to look at the total segment is. My highest contributing customers kind of move out to the higher bucket. And effectively that gets replaced by the lowest contributing person, right? So it's more a math issue. So a customer which is 45 crore goes out and customer who is 11 crore comes in, right? So if you disproportionately push our customers up, you do get a situation where the middle bucket kind of tends to be a little slower in absolute revenue growth. But from our perspective, I think what is important is the overall segmentation is looking good. The fact that we are able to replace those customers and scale those customers and add customers in all buckets is important. But the middle bucket does get a little bit of impact because you end up substituting, from a numbers perspective, customers that are closer to 40-50 crores by customers who are in the 10 to 20 crore because you can't make an entry directly at that level. So therefore the revenue growth optically tends to be weaker. So the way we look at it is whether the shift goes right. So if you look at the average size of customers, that has gone up, right? So that's the way I would suggest you read that slide.
Okay, fair enough. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Ms. Ritu Mehta from Tanla Platforms Limited for closing comments. Over to you, Ms. Mehta.
Thank you, everyone. That was the last question for today.